In other business news now, Bidvest has reported that its earnings are up 6.6%, with 5 of its 7 businesses seeing profit growth, including 4 with double-digit gains. The group's sales increased with a trading profit of just over 12 billion rand. The 2 segments that underperformed, however, were commercial products and automotive, which faced headwinds from a strong renewable base and a falling new vehicle market. The group declared a final dividend of 447 cents per share. CEO Mpumi Madisa discusses this performance with us. Thank you so much for giving us your time, Mpumi. First, let's unpack the highlights for you. You've described this particular reading of the results as solid.
Yes, and thank you very much for the opportunity. The highlights, you've actually given some of the highlights. So we've got 4 of our divisions that have delivered double-digit profit growth, 5 of them all growing on last year. The M&A pipeline was very rich. We concluded 11 transactions in the period, and a big highlight for us being that we doubled our Australia footprint with the acquisition of Consolidated, and we also had our first entry into the Asian market through the acquisition of rental hygiene services in Singapore. And then the balance of the acquisitions across South Africa, UK and Ireland really augment our existing product offering, give us a better diversification, and enable us to take a basket of services and products to the market that is much richer.
I do also understand that some of the business wins and strong performance come from the local aspect, even including in the likes of the tourism sector. I think that's where South Africa actually employs most of individuals that are in need and do not have maybe the skills that would be seen as very high eyebrowed. How important is this element for Bidvest to be participating in job creation in South Africa, especially in key industries such as these?
Yeah, no, absolutely right. So volumes in the travel and tourism industry remain robust, and it's really great to see. I suppose that the weaker rand has also supported travel into South Africa. We are a cheaper destination, I suppose, relative to other places where people can go. But I also think that a lot has been done locally just to position ourselves as a destination of choice compared to other destinations. The travel and tourism industry for us is broad. It's across our travel businesses where we actually do the bookings. When hotel occupancies are higher, we provide services into hotels, from housekeeping services to amenities to security to laundry services, etc. And so when we see volumes increasing in hotels, it's really fantastic for us. So we then have an overspill across multiple divisions when the travel and tourism industry is operating well. And on the job creation side, you're absolutely correct. We are very proud in this financial year to have increased jobs by 5,840. So we've created just under 6,000 new jobs in the year under review, something that we're really proud of, to make sure that operational growth actually translates into moving the country forward as well.
On that point, the business climate currently in South Africa, with this renewed hope that the country has post the government of national unity being formed, where's your standpoint with regards to the near-term outlook and the gains that you'd be liking to make locally? You've seen that there's a success in the maiden services that you provide in the likes of Asia.
Yeah, so in the results presentation, I touched on 3 areas that for me are a big positive for South Africa. The first one, you spoke about it. We've just recently gone through a political transition, which is a big transition for this country. And I think we've moved off too quickly. Not only did we have a free and fair election, but we also had an incident-free election. We've got policy certainty and we've got political certainty, and that's important. And so we start the next 5 years with no anxiety, in terms of what the politics of the country look like. And for multiple parties to be able to sit around the table and agree on one common goal is a big thing. And I don't think that that's something we should be taking for granted. It creates stability and it fosters a culture of investment, both for companies already operating in the country and those looking to come in. The second area that I also highlighted around the macros of South Africa is the issue around power. Eskom has beaten all its forecasts. And we must accept that we've had significant periods without load shedding. And that has built the confidence in the country. I mean, even from a personal perspective at Bidvest, we're now more confidently looking at how we further invest in our factories, in our production facilities. We're looking at adding more branches and retail stores because we've got consistent power. And it's just created this environment where we're far more confident, even to increase our sourcing locally, because local suppliers also struggled when there was intermittent power. So the power issue and also our improved mix with sustainable energy in terms of renewables, etc., is all very positive for the country. And the last macro area that I also spoke about was transport and logistics. In that space, we still have quite a high hill to climb. It's a complex space. But where I am really happy is the fact that we are tag teaming it. So business and government are working together. The NLC is in place. We've got a combined platform where we're sharing ideas. Business is giving capacity as much as possible from a skills perspective. It is a multi-year process that we have to go through, but I'm confident that below the radar, all the work that needs to be done is taking place.